evening and hello and welcome to the Daily Finance Wrap. It's your daily dose of personal finance updates covering investments, insurance, loans, real estate, everything else to do about your money with expert analysis. We'll also be taking our viewers' questions and queries, so please keep commenting and sending us your questions that you'd have, and we'd have our experts answer that for you on this YouTube live. I'm your host, Stacey Pereira, and in today's episode, we're going to be talking about the risk takers, those who want to innovate and help the world with their products or services, the thought leaders that are just looking for that push to, for them to go ahead and lead to success. But I'm talking about our young entrepreneurs. We want to help them. We want to help them get kick-started in their journey. So we thought, why not help them with a starter kit or, step-by-step guide into building this strong investment portfolio, not only that will support their business, but also secure their own financial success. So before we get into discussing all of that and what it will entail, let me take you through all the top stories in the business world today. If you look at the Indian markets, it was quite a range-bound and volatile session on the Lal Street. Despite that, we did see the Indian equity markets close in the positive for the fourth consecutive session. The Sensex gaining about 110 odd points, whereas the Nifty shutting shop above that 24,450 levels. The positive momentum was definitely driven by robust performances in banking as well as real estate stocks. We saw the top gainers among the likes of an HDFC Life, HDFC Bank, Apollo Hospitals, whereas the laggards were in the likes of Bharti Airtel, Cipla, and the likes of those. We also saw a lot of action among defense companies, and that's like stocks like Bharat Dynamics or even HAL. Various shipbuilding companies as well saw a lot of action, gaining close to 4% in today's session alone. And this after on the back of the positive developments that we saw, where the Defense Acquisition Council or DAC has gone ahead and approved a 5 capital acquisition proposal, which is valued at 21,772 crore rupees. That really gave a boost to most of your defense stocks as well as shipbuilding stocks, and those were pretty buzz in trade today. But moving on then to the primary markets, where we also saw, Apex Ecotech shares that made a debut on the NSE Emerge platform, and this saw a strong 90% premium on its listing day. The 25.54 crore SME IPO was subscribed about 421 times during its IPO 3 days, but the shares then went on to list at 138.70 on the NSE Emerge platform, and this versus its IPO price was quite a 90% rise, or the premium that we're talking about from that issue price of 73. The listing was definitely not what was expected, because in the gray markets we saw just a premium of about 45 rupees that it was commanding, but on listing day surprise that we saw almost a 90% gain there for Apex Ecotech shares, which was only priced at about 71 rupees, but closing the day at somewhere close to 138 rupees a piece. Moving on to another stock that was a buzz, and this is another newly listed stock, we would say. I'm talking about Swiggy, where the share prices rose close to 7% today, hitting an intraday high of 534.85 rupees a piece. Now, the surge seems to be the interest, rather, or the buying interest is really coming from post the company's Q2 results that they announced last evening. We saw the prices close to 517 rupees per share also, and that moving on to 534 at some point during the day. Now, this in the back of the Q2 results, like I said, also moving their market cap close to 1 lakh crore rupees. Now, for the performance as such, the Q2 FY25 results, Swiggy's consolidated net loss has narrowed slightly to about 625.5 crores compared to the 657 crore loss that it had reported in the previous quarter for the same period. You can also look at the revenue from operations, which grew by about 30%, coming in at 3,601 crore versus the 2,763 crore that it recorded in the same quarter last year. So good news coming in there, losses narrowing, which is clearly a good sign, and the stock also, the Lal Street, giving it a thumbs up Swiggy's share price, they're seeing some good bit of price action in today's session. Moving on then to more policy related news, where we did see the finance minister introduce the Banking Laws Amendment Bill 2024 in the Lok Sabha today. The bill goes on to propose about 19 amendments aimed at strengthening the governance as well as improving customer convenience and enhancing investor protection in the whole banking sector. Our Finance Minister Nirmala Sitharaman emphasized on some of the key aspects or the key amendments that this bill is going to bring about. It will also go on to allow bank account holders to now nominate up to 4 individuals as your nominees. There's also going to be provisions for unclaimed dividends and bonds that will now be transferred to the IEPF, with the provisions of also claiming or refund from this particular fund once it's put there. The bill also goes on to propose raising the limits for that substantial interest for directorship from 5 lakhs to about 2 crore rupees. Now, remember, this limit has remained unchanged for nearly 60 years, and this amendment bill plans to bring about this change where you have directorship, that substantial interest for directorship being increased to about 2 crore rupees from the 5 lakh that it currently stands at. So that's all the top headlines from the markets as well as corporate and policy space. But now moving on to our interesting part of our chat today. And today, like I mentioned earlier, we are talking about the aspiring entrepreneurs, those that have that will to go about and innovate and bring about change, perhaps, and that's how they start off their journey. But it's not always an easy one. Now, it is important to understand not just the dynamics of your particular business, but more importantly, also the financial side of that business too, in order for it to increase its chances of being successful, right? So, no matter what industry or sector you choose to enter in, having sound knowledge and understanding of the finances can always provide invaluable guidance for the future of how this company will grow. But how should one really get started? I do have an idea, but how does one move from just an idea to actually execution? Where should founders be investing all their capitals in? Whether should be only to grow the business or they need to diversify? What is the need of an emergency fund for a startup founder, and how important is it in today's day and age when you get to hear instances of so many corporate governance issues? All of that is what we're going to be speaking about, and how one can really avoid such situations. And to answer some of those questions and dilemmas and helping us today is she's the founder at Investography. Welcome on the show, Shweta. And let's start right away by putting or giving a scenario to our viewers, and also where you can perhaps help them understand. If I know someone who has a business idea and has also managed to secure some bit of capital for to start this whole idea or enterprise, what should be my next course of action? Do I need to get a financial expert who's going to tell me how I go about it, or how should I just start off and then get into building the bricks? I have an idea and I have some money. What is my next step?
First of all, thanks, Stacey, for having me here. So it's interesting, right? Because we are talking about something that you're extremely passionate about and can make a difference. So this is something that is metaphorically and literally your baby, right? So where does one draw the line? So especially for entrepreneurs, founders, co-founders, it could become very blurry. The lines between work and life becomes very blurry because there isn't sometimes a line. So a lot of the hit takes on their own personal finances as well. So one of the things that they should start off with, once they've got the idea, once they've initially taken on whether it's their own funds or taken loans, secured money for the idea, for the business, start off with a business plan, start off with a helicopter view where it's more macro, and then don't forget to get into the micro details as well. A lot of founders or entrepreneurs do make this mistake that they don't get into the nitty gritties, and this does proven costly later. So it is important that while they have a macro view and they have their a passionate idea and the whole business that is happening, but getting into micro details is important being frugal while they have secured the funding. Initially, it might seem that, because we have the funds, we can go aggressive or we can spend a lot of money. But getting frugal, I think, has time and again proved that it would hold them in good stead. So I think the one of the first things that they have to do is prepare a business plan. Of course, not everything goes to plan. That is absolutely fine, but doesn't mean you don't have a plan. It doesn't have to be written in stone, but it does have to be written. It can't be just a verbal or oral financial plan. It is something that has to be there. Second, and very important, is budgeting. This gives you a clear idea about where the money is going, where money is coming from, and it's extremely important. And a lot of people, whether it's even us as individuals, right? This is something that we don't like doing. So budgeting as an exercise is not very popular, but it is extremely effective. So I think two things, planning and budgeting, are the next steps that one can start off with.
Right. So help our viewers understand what exactly are we saying when we're talking about financial planning or goal setting agenda or even a budget. Does that have to do with the money that is already secured? Does that mean you make a plan so that there is enough money to be putting at different stages? What exactly is this financial plan then?
So when you're preparing your business plan, the important aspects that you would be looking at is, what are your goals, what targets are you setting, and how are you spending or investing the money that you have secured, right? So on what aspects of the business are these going, whether it's towards products, whether it's towards marketing, whether it's towards building a team, and what percentage of each of these aspects are getting that amount, right? So that dividing the resources into these categories is extremely important. And then from dividing into not just the broad categories, but even getting into micro details, as in, say, for example, a cash flow statement for the next 12 to 24 months is going to give you a lot of clarity. Of course, like I said, it's not that it will go according to plan, but it's good to have that plan because it gives you a guidance, and it also shows you how far off you are or have been from what your target was. So for example, marketing expenses, you assumed that you're going to spend X amount on marketing, but you've managed to get creative instead, and you've spent only a percentage of that in on marketing. So what are you going to spend that money on? Are you going to extend the marketing budget? Are you going to make sure that you're hiring more people? What are you going to then spend that on? Or are you going to build customer service because now your product has taken off? So it actually gives you a good idea on where to pivot as well. So having a cash flow statement is the next good thing, or the next step. So as we go step by step, I think that's the third step. That'll give you a lot of clarity. And entrepreneurs can sometimes get very fuzzy in their own little worlds, talking as one, I know, because you're so passionate about what you're doing. These documents actually help you translate some of these goals and even communicate it to the team.
Right. So you need to have that plan or the goals that you've set. You need to be quite precise as to where you're going to be, what you're going to be using those funds for. Have your at least your money kept aside for it, and then also look into that cash flow statement as to what is coming in, what is going out, and then have that agenda set for you. So that gives us an idea of how to start off. Now, when it comes to an startup founder, there's always that dilemma or question of where are we going to get this money from. Now a lot of people would, since it is their own idea, they would say, okay, I'm going to put in my money, and that's how you have your bootstrap startups that come about. But somebody would also then want to expand it and get outside or get help from outside, and then they approach VCs and you have all of your funding rounds. So where does one really draw the line, or how does one come up with a plan as to do I stay bootstrap, do I look into VC funding? What are the pros and cons of both? If you could just share light, and that will perhaps help future entrepreneurs as to what step they need to be taking.
So getting funding from outside is like a double-edged sword, I would say, because it is not something that's going to be easy when whether it's to procure it, whether it is to manage VCs after you've gotten the funding. So I would recommend initially being bootstrapped so that you do have a proof of idea and a proof of concept. So once you've actually done that and show a revenue stream if you can, then if you're looking at VCs or external funding, it could be a good idea because your valuation as well could be very different from when you started off. So instead of giving away equity right at the beginning when it's actually not worth much because it's just the idea, to postponing it if you can till the proof of concept, or even showing sale for that matter, even having customers, even growing it a little bit, the valuation might be extremely different, and you might end up getting a good valuation post some of these things. Once you've done revenue stream, once you've done proof of concept, then it is something that you can decide. Bootstrapped versus getting funding outside, it's a very personal decision, I would say, because at the end of the day, the entrepreneur has to decide how answerable he wants to be or she wants to be to somebody else. A lot of times we are looking at entrepreneurs who've left jobs because they didn't want to answer to somebody. In those cases, it may be better to be bootstrapped for more time, and then deciding once it grows to a level that they do want to get funded, versus somebody who may not have worked or has this fantastic idea that they would like to go ahead and make a splash and make a huge impact right away, right? So huge growth initially, get noticed. I mean, that is something that would take a lot of resources, whether it's in terms of manpower, whether it's in terms of financial resources. So that could be the difference. What is also I think it would be fair to say it also depends not just on the entrepreneur's idea and business, but also their personality, how and personal goals, where they are in their stage of life, what kind of um, uh, journey that they're looking for from this business, what kind of impact they're looking to create. So a lot of these things, what is the speed that they want to go ahead and further this business? Because if it's something that you want to do slow and steady and make sure that in 10 years, in 15 years, in 20 years is where I see myself and my business getting there, it could be very different from in 3 months I want to get to this number and I want to make this flash because this is what I want to do, or because somebody else might execute this idea faster than I am going to do it. So it could be either way, depending on the type of product or service and depending on the kind of journey the entrepreneur wants.
Right. So it is a more personal decision whether to stay bootstrap or get outside funding, and both have their pros and cons, like Shweta was mentioning. But Shweta, you also did speak about in not wanting to be your own boss, and for future entrepreneurs, that is something I think that is a big drive. But also making that transition from a steady paycheck to a rather uncertain compensation, depending on if you're putting in your own money or taking it from a VC, then being answerable. Do you think, like one is starting off on an idea? You did say that it's better to stay bootstrap, but do you think that business idea, is it better to still continue with your current job, start a pilot project or do that, and while you're still employed, and then take the plunge? Only that makes sense, or is that just being too conservative and not really being that risk taker?
Yeah, I think sometimes it could be if you're a planner and you don't you have the time to make sure that you can give the side project as well some bit of time. We do see entrepreneurs doing that all the time when there is an idea, whether it's a product or a service, and they start off with a little bit while they're still working a steady job. But a lot of people may not have that flexibility. So if you do have that, please go ahead and do if you can. Make sure that you do have 12 to 24 months funds set aside for your expenses. So whatever your monthly expenses are, 24 times that is set aside so that you don't have to dip into your company funds or draw a salary for at least a year or two. That might help considerably while you're running or just beginning that business, right? Because
Right.
every penny matters at that point, every day matters at that point. So it could make a meaningful difference. Having said that, not a lot of people will have this flexibility of starting the business, or at least having a proof of concept while they're still working. A lot of
Right.
stop working and then sort of get into or start their own business. So then what do you do then? Then make sure at least you're financially secure, right? So that your life insurances, your health insurances personally are fine. Your cash flow, your emergency funds personally are set aside and are in order. So that's the first step, even before you plunge into, because you don't want to sort of ignore this and then start off on a bad foot here. Because if something does happen personally, you'll be set aside, not just personally but even professionally, and at the worst possible time, because you're just starting off.
Right. In fact, I'm just going to come to that directly because Murphy's law says that anything that can go wrong will go wrong. So at one point or the other, there are going to be those unexpected emergencies, or those hiccups that the business could face. Does this become imperative then for an entrepreneur to have that emergency fund kept aside? For their business, particularly to have an emergency fund so that there is that. Go to when things go wrong, and how should one then budget for this emergency fund, because you do have money that you're putting in into the business, you do have money that you need to keep aside for your personal needs, and then you're going to have to build this emergency fund as well. So how does one go about trying to distribute this or really build this corpus?
Very very tricky question, because for each one I think it's different. A lot of people tend to completely ignore the emergency, saying if I don't see it, it will not happen. But it doesn't work like you're an ostrich and you put your head in the sand. It doesn't work like that. Ideally, keep putting aside, even if it's just 2% of the revenue, 2% of whatever's coming in, that you're putting aside for an emergency. I think that's a good start. Any amount, no amount is small, because it all adds up at the end of the day. So set aside these funds. So ideally set aside where it is separate, and where it can grow a little bit. And I think that's the key, because if it's going to be in your kitty where everything else is, it's going to get used up for sure. Because a new business, whether anything else is true or no, it's always in need of funds, right? So this might then become something that doesn't even get taken care of, doesn't get looked at. So I think just starting to keep aside any monies for an emergency, I think will go a long way.
Right. Let's talk about then diversifying your wealth beyond your business. Okay, because now you've got into the business, you've got that initial money, you want to safeguard yourself against these potential risks that could happen. So you start building this emergency fund as well. But then, can you then venture out and pursue other either personal growth levels, or build that financial security? And at what point should then this founder, or an entrepreneur, look at going beyond their business? Because now whatever comes, you'll try and either put into the business, try and repay your debt, or it goes within that. But at what point should you be diversifying, and does this need to be done simultaneously while you're also growing the business? How should one go about this?
See, simultaneously would be ideal, but it may not always be possible, because you're just starting off. In fact, you're putting in everything that you have as well, or pretty much a lot of that you have. So I would say, when you see a bit of stability in the business and the team, you can start to explore other options as well, be it investments, be it property, whatever it is that you're looking at as a diversification. I think that's the time when you see a little bit of stability. Could take a couple of years, absolutely fine, because it does take time. It isn't something that you can build in a day. But you should be this should be on one of your goals, that this is something that I want to look at, say 2 years down the line, or 3 years down the line. This is something that I want to start looking at, and not have everything into just your business.
Right. What about SIPs? If that is something that a startup founder can invest in, just as an instrument, as a source of income for the future, because we're talking about getting capital from outside. You're talking about bootstrapping, but can this also be a medium in which you can have some income coming in for for the startup that you're doing? Can one take advantage of that fact that there can be money coming in as a different source of income, and how does that really help if a startup founder also wants to start an SIP for the business per se, or any other kind of means that they need to be taking care of that could also then provide an income for the business?
So that's interesting, right? So how do you do an SIP for your business? So I think the emergency fund that we spoke about, that can be definitely taken care of through the SIP. Like I mentioned, a small amount. So once you've set some sort of revenue stream that you have on a monthly basis, some amount can go towards an SIP in, say, a debt fund, to make sure that that's building your emergency fund. And
Hmm.
from a personal standpoint as well, for the founder, it could be quite interesting. He may not be able to do an SIP per se, because he may not be withdrawing a salary. And if he is, then it is something that he should definitely be looking at doing, so that again, the diversification that we spoke about, that he should be doing simultaneously, SIP is a great way to ensure that that's happening.
Right. What about other instruments like a life insurance policy or any of these instruments, or any other ways that they could be investing that could also then help them as an income for the for your business?
Yeah, I think life insurance is something that everybody should definitely look at, but in more so in case of an entrepreneur, because here, especially when he's starting his own business or her own business, they have to make sure that their family isn't impacted adversely in case something goes wrong with the business, or with them. So make sure that they have increased their term insurance. So when I say term insurance, one of the things that they should do it before starting a business, or just at the time of starting the business, is take life insurance in their name. And especially if you're married and have dependents on you, then definitely take more life insurance, the most you can take at that point. Uh, do take that term insurance, because it is going to be pure and cheap. So that's going to be a good idea. One thing that gets ignored is the MWPA. So on the
Mhm.
term insurance, Married Women Protection Act is something that you can do to protect your spouse from any liabilities that could arise towards your business. So the insurance money, in case something happens to you, would be earmarked only towards your family, and not to go towards
Yeah.
the business. So this is a great way to protect your families.
Well, that's quite interesting to understand and also make that distinction between what really should go towards the business and what one should be looking at the others or taking care of your family for that matter. But among the, what are the common mistakes that you've seen entrepreneurs make when it comes to starting their business or taking unnecessary debt? Could perhaps be one of them. If you could just list out something that the future entrepreneurs that are looking at make have this checklist of sorts so that they don't make the same kind of mistakes. So if you could just point them out, or just give what should one not do in case this is something that you are experiencing on your entrepreneurial journey.
So, a couple of mistakes I think I can talk about. One is seeing the world with rose tinted glasses. So, just ignoring the feedback that you're getting on the product or service, and just pushing through, saying, I know this is a great product. Perseverance, while it's fantastic, sometimes it can be your worst enemy. In case you're not listening to what feedback you're getting from your customers. So, I think that's number one. Second is being very short sighted, saying, I'm looking at this only for funding for the next, I'm just looking at increasing the valuation and getting funding. I think that's something that founders or entrepreneurs should definitely avoid. The third is, I think, getting partners that are very similar to you and not complementary. That might create a clash, and also not a well-rounded team. So the third mistake would definitely be having partners or co-founders who are not complementing your skills and talent. I think one of the last ones would be not being frugal, or just being way too generous when you have the money and spending a lot of money. I think frugality is the underrated hero, and that's going to serve you very well in case you're going to take it to your side.
Right. So quite interesting points there. But like Shweta is mentioning, frugality is something that one needs to keep in mind. It will definitely help you in the long run. Have like-minded, co-founders or people who are working. At least the people working on the team need to be on the same platform. Have those emergency funds in place so that if there is any kind of issues, you are safeguarded in that way. Shweta, we'll quickly try and answer a couple of questions that are coming on our live feed, and hopefully you can help them with their queries. Charmi says she's almost 25 and has just started a small digital marketing agency. How does she separate her business and personal finances while keeping both healthy? Please guide. So, if you could help her with some tips, maybe on how she can do this to at least start off.
So one of the tips would be, if she has bootstrapped it, in case it is possible to draw a small salary, maybe 6 months down the line, once there is a set revenue stream, or even now if it has already begun, start taking a little bit of the salary, because otherwise you would end up burning through your finances, and getting that stress is something that you definitely don't want. At the same time, making sure that there is a line between work and life, so that life can be blurred quite easily, and the number of hours you're working is not something that I'm going to get into, but the amount of money that you're putting in is something that I would definitely like to sort of discuss. At the same time, where she's withdrawing a salary, start setting the emergency fund aside as well, especially with a digital marketing company, and where you're just starting off. Initially, if you do have a good set of clients, don't count on it that you will always have these clients. Make
Right.
sure that you're saving for the rainy days as well, because while your clients may come and go, your team is something that you would need to protect. So make sure that you're working on that as well. Also, since it's a business that you're just starting, make sure that the contracts are sort of well read and well drafted, and you are protected as well.
Right. Vineet Patel says that he's been reinvesting all of his profits from his business for the past 2 years. At what point should he start diversifying into personal investments?
So I think if he's already started investing in for the business and making a profit, I think it's a great time to start. Like I mentioned, even during our conversation, 2 years is usually the time when proof of concept is done, revenue streams are set. So this is a great time for you to start looking at your own, building your own finances as well. So building your own portfolio. So something to take away from, or how to differentiate, would be definitely for the business, make sure that you're investing from the business accounts, but from your personal side, you're investing in your personal name. If you have family members and their names, towards their goals and towards long term. So the business money might be short term, might be medium term, because you may not want to commit to long term and block money or take extra risk there, but personally you could. So that could be a good distinction between the two types of portfolios that you're creating.
Right. So have two different portfolios for your business separately and for yourself as well, that you can have in your family member's name. I think that also answers Kunal's question, who's saying how to balance between investing for your business versus maintaining that personal emergency fund as well. So this pretty much would help. Another query that's coming in from Ashish Thakur, he's saying that between GST payments, business expenses, and personal needs, he pretty much struggles then with cash flow management. Any practical tips that he could use?
So a lot of times when we are especially considering revenue, we are not looking at things post tax. So look at it post tax. So whether, if you're accounting for your revenue streams including GST, make sure that you're not doing that when you're doing your internal calculations. At least you're running your spreadsheets, at least, because that will give you a realistic picture. Otherwise you're accounting it as an income, but at the end of the day it's actually something that's going as taxes. So make sure that you're doing that. And that's one thing that I have learned, that you account for taxes before, and not after, because that could be a large chunk of businesses. It could be up to 25-30% as well. So it could be a large chunk.
Right. So be mindful of, having all of that spreadsheet out there and clear as to where your money is coming in, which is why that cash flow is going to be very important to have that note in front of you when you're getting into anything to do with your business. Well, let me take this opportunity to thank Shweta Jain, there, a founder of Investography, for helping us, understand what really is that mindset that our entrepreneurs need to get out there, and also not just that, but have that financial backing as well when they want to go out and start their new ventures. So starting a business, of course, is really exciting, but it's not that simple as well. You need to have, or you need to be evaluating all of your personal finances separately, also giving enough time and energy to the product or service that you want to put out there, and of course look at other funding options if that is something that you want to look at, and perhaps will give you that growth and push, then that could also be another way of looking at it. But founders, all of this will really help you stay focused and keep your energy towards the startup if you do have the financial side also simultaneously being well developed. Well, thanks again to Shweta for speaking with us, helping our viewers with their queries. And to all of our viewers, it's a wrap on this edition of the Daily Finance Wrap. Many thanks for watching. Stay tuned to Personal Finance TV.